What's up, everybody? All right, this is Chef again, and we're gonna do this weekly watch list, right? I think the watch list today might be a little bit shorter, but it's not too bad, right? It's a 4-day week, and we're just gonna see if we have enough volume to do something, right? All right, so the biggest thing here is last week there was some volatility, some aggressive selling, and some pressure all across the board, right? As you can see here, one, two, three, four, five. From Friday, we let off an aggressive sell-off, and we just kind of like broke trend and put a lot of fear in markets because of whatever the Fed said, right? I'm not too sure what was said, so please make sure to go do your due diligence. But whatever was said, it almost looks a bit bearish and a lot of fear in the market. The volume increase was because of the fear and the volatility, which that kind of brings in to confirm more of a trend. Regardless, never get biased as to what was said or what is being said or what's being heard of or what's going on. Be aware, but don't get biased to what was said in the past. Okay. So whatever was said here on Friday is basically playing out already. It did its thing. So now we're just waiting for the charts to do their thing. The biggest thing here that I want to point out is that we are at a retest level. Okay, so I'm going to take off this little trend line and just kind of show you the importance of this week alone. What I want to look for now is a trend change in the markets. A lot of things can happen here this week, but when it comes to the weekly time frame, we're going to need a couple more candles here, so a couple more weeks, maybe 3 to 4, maybe a whole month of candle bodies just going sideways, right? What I mean by that and why is it important this week, right? So just before we start talking, we had this trend line here last time. And we did say that we are in a nice downtrend. So technically we are still coming on down, right? A lot of people have this channel here. So from the beginning of the year, we've been coming down and it's been just staircasing down. Literally just drop down, drop back, go back up, drop down. And then finally we created this nice little trend line that we rejected 3 weeks ago. So now we're in the 4th week and we're in a new month and we are properly retesting this specific level. Now, why is this important? It's important because after a downtrend, what you want to see is the potential reversal for a ticker, whatever ticker it is. I mean, I don't care if it's the market. I mean, I don't care if it's the VIX or BAC or Uber or whatever it is. I don't care what the ticker is. What you want to see here and what the proper thing to look for is the creating a base, which we did already. We created that little base right here. So we just kind of drop down and snap back inside. Okay. And we broke above it. We broke above it and created a nice trend, right? So we trended for 1, 2, 3, 4 weeks. For 1 month straight, we were bullish. All of a sudden, we come back down into that trend line and test it. So yes, automatically, the trend in itself from the beginning of the year has been bearish. So what to look for? You look for the proper retest. The proper retest of that specific base that literally broke out and gave us that bull run. Here, we don't really have a base. So this is why I'm saying that the difference now is the chart in itself, the base that was created, the reason why we went bullish, okay? We didn't go bullish because we're in war. We didn't go bullish because we have a recession. We didn't go bullish because of inflation or whatever other reason was out there or because of the Feds. We didn't go bullish for those reasons. We went bullish because we had a base, as you can see, 1, 2, 3, 4, 5 candle bodies that created a nice base where buyers showed up. They got tired of selling the market and they came in and ran it up, right? So that's kind of what you look for at the bottom of a trend. So meaning this trend, okay? Number 2, you get the retest. Where is my retest? Technically, it is here, okay? Whatever happens this week, I would assume that I would need at least 2 to 3 candles closing above this specific level, okay? So over that 39, I'm going to say 39, okay? 39 and I'm going to say 38.80. Let's see. That the bottom of this green candle right here, 38.77, okay? In my eyes, it's 38.80. 38.80 and 39.15 That's kind of like that zone that you want a candle body to stay above. Okay, candle bodies need to stay above. So for example, I'm going to look for this. Okay, I don't care what this candle does or how big it is. This is what I'm going to look for. Like literally, this is the candles that I'm going to try to look for because I'm going to look for this. That's kind of what I'm looking for. I'm looking for that potential reversal that can break this trend finally. Okay. Or literally just reject back on down and just, do something like that. Like whatever the reason is, whatever it is, I don't care. What I really want is that base to be created in the next couple of weeks. So yes, this is a 4-day week. So I'm assuming that this candle body that's going to form next is probably going to be a lot smaller than these two big red ones, right? Selling pressure was already there. It started last week into this week, and there is a lot of volatility, which is okay. Nothing wrong with that. But again, it gives you that proper retest, right? The proper retest is what's going to give us the market reversal, and it may not happen, okay? But as long as you know here the importance of understanding this specific chart and the way that the charts may move is very, very important. We need 2 to 3 candles up in here to form a base for a proper retest and to trend back up. That's what we need in order for a bullish scenario. In other words, if once you start trending below this yellow box, make sure that you're bearish and make sure that you're following the staircase pattern to the downside, because technically we are still on a downtrend. And this is the only identification of a potential reversal here for a bullish play. So, but we can end the year all the way down at this bottom. I mean, literally, we can end the year going range and staying stuck in between this 42 and 36. Whatever happens, we're kind of just stuck in this level, and we don't know what we're going to do. We're going to end at a bearish year, or we can end up going bullish reversal towards the end. You never know what may happen, okay? But either way, this is very important to see, and this is the only level that you really need this week. Other than that, keep it simple. Trade above the pre-market, trade below the pre-market, and that's all you really got to do. As long as we're above this 39.15 and 39, we're bullish. Below 38.80, we're bearish. Very, very simple this week, and patience, of course, in the next couple of weeks. Okay, so that's the weekly time frame. This is the breakdown of ES, and this is the only thing you really need. Okay, other than that, everything else is extra. Everything else is more indication for you guys to get some type of confirmation, whatever it is that you guys do or trade. So with that, I want to bring up a couple tickers that caught my attention for this week, since it's only 4 days, right? So for this first one, I'm going to look up at TAN. Okay, I'm going to show you the ETF right here on the 4-hour time frame. This basically is retesting right now, and I think that this one might start trending down, right? So I'm going to look at the weekly, just so we can see that we are at some important levels. So you can see here, boom, we hit a supply, and now it looks like we're trending back on down. Based on the 4-hour time frame, it looks like we did close just right below this little base here. Okay, so I am looking bearish below 82 and 80. Okay, as long as we're below 82, I am leaning bearish. And my first target for this is probably going to be around 76, honestly. So I'm going to look for this piece here. Right there. Okay, so this is the supply that I'm looking for. An old supply that can now become demand, or we can get a little bounce right here. But either way, I think I want to short it all the way to this downside. Why am I bringing up TAN? Because there's tickers in the solar that look like they might start a bearish trend, right? So giving you guys TAN, giving you guys the perfect levels for the sentiment. So as long as we're below 82 and 80, we're going to keep on dropping down to the 76 and trail like every dollar, right? So the first one for my list is going to be FSLR. FSLR has been rolling since earnings and has this nice staircase pattern here. So what I'm going to look for is 2 things here. The break of this trend line, which is going to be the pre-market at 125, or the rejection and the building of this supply level that can break down. So it can either come up to this 130 and reject and start trending back on down, hold here or whatever it is, and then trade the breakout. So I'm leaning short on this. 120. What is this? 121, 118, 115, 114, and then 112. So these are the levels that I'm looking for, right? So these are going to be my targets. Here's my target 1. Here's my target 2. Here's my target 3 and 4. That's what I'm looking for. I'm looking for a change of direction for FSLR. And it looks like this aggressive volume got smacked down. So to me, it looks like there's going to be more selling pressure on FSLR than there's going to be buying. So this is going to be one of my top plays for this week that I can potentially grab a short swing. So as long as we're below that 125, I'm going to short it all the way to this bottom of 112. Okay. If it wants to drop even further, then by all means look for 104 and even 100. So this would be the next level to actually hit. Okay, so that's that. All right, that's that. The other ticker that caught my attention again is JPM. JPM is back in its base. So all you really got to do is to remember to mark these levels at 117, 116 supply, and then the bottom of 118. Sorry, 118, 112, and like 111. Okay. So 111 and 112, this whole level is your demand and this is your supply. All you got to do is wait for the break above or the break below, whichever one comes first, or just buy the dip here or grab puts here, stop out right above, stop out right below, whichever one comes first. So just keep in mind that JPM is back in its range and we're going to be looking for the breakout of 116, 117 to trend right back up to 124 or the break of 112 and 111 to drop down into this 106. Whatever comes first, just keep that on your alerts. It's not something that you got to watch, every minute. Just set the alert and be patient. Okay, so that's FSLR, TAN, and this is JPM. Now we're going to go look at SHOP. So I've been waiting for SHOP, and I've tried swinging this a couple of times, and I've gotten out green, I've gotten out red, and now we're right here again. We do have this channel to the downside. This is what's cool about it, that we do have a channel coming down into this demand. Now, it can continue down, and this thing can create a nice red candle like this, or it can chill inside here, build a base, build that demand, and have that proper breakout all the way to that 40 level. So almost like in the past, here's your demand, and here's your reaction, right? Every time we come down in this level, this 31 and 30, we trended back up all the way to almost the highs of 40s, all right? So be aware that SHOP can potentially build a demand here and start rolling back on up, okay? So be aware of that. Now, this can be a swing. And let me just set some alerts here. So this one is just going to be the break above 32, 33, 34, all the way to the high of like 35. All right, so that's SHOP. All right, the next one is going to be Netflix. One thing I did notice about Netflix is the fact that a lot of people are watching this, and this is something that I talked about last time with this huge gap that it has. I don't really care for the gap, okay? So whoever's trying to play this, please don't. It's too big of a gap for Netflix to go fill that, right? It's not time yet. The market is not on a bullish trend, and the market is not going parabolic, and there's nothing about Netflix that's going to cause a great catalyst just yet in order for this to go back up. What it's doing right now, it's still trending down, and it's sold off a lot. So make sure that when you guys are looking for these gaps, you guys also check fundamentals. Okay, that's the biggest thing. So go do some DD on that and be aware of what you're looking at before you go and say that there's going to be a huge gap fill and then you're going to enter these swings, right? Anyways, I noticed that the market started trending down. And since the market has been bearish, I noticed here that Netflix did not drop any further than this 220. Okay, this is what catches my attention the most, because even though it has this huge gap up here and people are looking at that, I truly don't care about it. What I care about is the fact that it held its levels and it did not trend downward with the market. So now the opposite effect here is going to happen. If we have a reversal candle in the market in the futures, and if they go green for some reason, like intraday, Netflix has potential to break out again and create a nice staircase pattern, therefore leading a lot of the big names in the market. Yes, a lot of the big names right now, like Apple, Google, and Meta, all of them are downtrending. But the question is here is, why did Netflix hold? That's what shows strength in the market. If Netflix would have followed the market, I think this thing would have been, trending like this and then tested this bottom of like 170. So, but it didn't. Okay. You see these red candles on ES, right? You see this now nice downtrend, but then you compare Netflix, where's the downtrend, right? There's no downtrend. So this shows you that there's strength in it, and we can potentially look for a bullish play. Okay. So what levels that I'm going to have? I'm going to have this 234. Okay. 234 and then the bottom of 220. Those are going to be my major levels to go short and to go long. That's it. That is the biggest thing here for Netflix, and it's the only thing that I'm looking for. So if this thing hits the bottom of demand, I think I'm going to look for a dip buy opportunity here, and then trade it above the pre-market, whatever it is. Let's just say the pre-market is right here. This is where I'm going to go long. And let's say on this day, the pre-market is here. That's where I'm going to go long. But if it continues to actually break out of there, that 234 and 235, then for sure I will long it above that specific range as it's going to be a breakout play. So keep your eyes on Netflix. And just set alert. That's all you really got to do is be patient, right? So that's Netflix. The other one is going to be Uber. So this one is going to be for smaller accounts out there. And just to show you guys the importance of this, let me show you. Here is your uptrend, and here is your 50%. All right. So amazing, right? That Uber is actually ranging in a perfect spot. So all you got to do is over that 29.70 or below 28. That's it. It's the same thing as Netflix. My question here is, even though with the market trending down, why didn't Uber continue on down? It's that it's ranging, it's building accumulation, it's showing strength and not moving with the market, it's holding. So when you see a green day in the market, go look at these tickers, Netflix and Uber, and all you got to do is set those alerts and go long above, short below. That's it. Very, very simple trades here. Things that you guys can set alerts on, and not be impatient, but rather be patient. Okay. So that's JPM, SHOP, TAN, FSLR, and Netflix. 5 tickers for the week that you guys can focus on and definitely be aware of this coming week. So a mixture of tickers across the board and definitely great setup. So just be aware, guys, that we are at retest levels for NQ, ES, and the Russell. All of them are retest levels, and all we're looking for is for these levels to hold these next 4 days and just to stay range. If they stay range, remember that that is a great thing, okay? If you get lost on direction, remember that the sideways movement is good. That is called building for the next move up or down, all right? So be patient, stay green, manage your risk, guys, please, and stop loss where you're supposed to. Don't bagel something just because somebody said hold your position. If it doesn't make sense, get the heck out. If it makes sense, stay in. Very simple. The minute you start to question your position, that is the minute that you should automatically just get out the position, and don't go try asking somebody for their opinions just so you can bag hold something with some reasoning. Okay. So hopefully that makes sense for you guys, and I hope you guys stay green the rest of the week. So I'll see you on the next one. And yeah, like and subscribe to the channel, and I'll see you guys. Y'all have a great week.